Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the Russell 2000 ETF, ticker symbol IWM. If you've been following along with us long enough, you'll know that I leave my lines on the chart from last week's forecast so we can see how that worked out. And as I zoom in here, you can see that last week I drew this downward zip line, as I call it, with the end of the line being 194.34. Early in the week, it didn't look like that was going to happen. But guess what? Monday and Tuesday, we rallied up. Wednesday, we hit that 20-period moving average. And then guess what? Filled that gap. Now, if you're following along with my gap fill rules, you'll know that 80% of the time, gaps fill. And then once they fill, there's an 80% chance that prices will drop after the price fills. And that's exactly what's happened. So we hit that price target on the way down. The volume is increasing while the price is dropping. However, something very interesting is happening here, which leads me to believe that possibly Monday or Tuesday we could see a bounce. And now that we've hit these targets here, let me erase that line and redraw what I think we could see. I do believe maybe early in the morning they might open the market lower, possibly gap lower, but then I think it's going to rally up into possibly Tuesday and then maybe even move up to these previous lows right here. Now, I'm not getting bullish on you because by the end of next week, guess what? I think we're coming right back down. So I'm going to do an extended forecast, even going out into May. And the reason I do this is because if you look at my monthly chart here, I mentioned this a couple of weeks ago, that there's this sell in May, go away crowd that is watching this market very carefully. And right here, as I zoom into this price action, you'll see that this is a bearish engulfing candle on the monthly chart that completely engulfs the two previous months of green candles. Not only that, but as I zoom in here, you'll see that the high is right at that 20-month moving average. So in other words, we're closing below the 20-month moving average, which is a big deal. I also think that those people who tend to sell in May might not even wait for the first week in May. They might say, you know what, April looks bad. This is only the second time in 17 years where we've had a red candle on April. And so they might decide to sell early and go away early, right? So we'll have to see what happens there. Now, again, going back to the daily chart, you'll see that while we have a lower price from the previous low here, we have a higher low on the CCI. That's what leads me to believe we might see a little bit of a bounce and then the turnaround from there. So that is IWM. If we take a look at the Qs, which basically represents the tech sector, we have the same story. I had my downside target right there at 332.31. We hit that today and went a little bit beyond that. Again, volume is increasing, but here we go again. We see a positive divergence on that CCI and a positive divergence on the stochastics. While we have a lower low in price, we have higher lows on those oscillators. So again, I'm just going to say maybe on the opening we'll bounce that and then start to move up. I'm not going to have the pullback on this one just yet. I'm going to wait for that upside target to hit at 335.78, and then we'll have to readjust our targets from there. So that is the Qs. Taking a look at SPY, again, another one where we hit the target. This was pretty incredible because I left that in place. You know, some people tend to not like how I extend my targets, but that's just the way it is. Instead of me continuing to draw these diagonal lines and moving them out, it's just easier for me to leave a horizontal line in there with the price target. And as you can see, the price target from this zip line was exactly at 430, and it was off by a couple of pennies when I drew the horizontal line at 430.23. In any case, we hit that target. Now that that target is hit, this is going to be a little bit different. We'll have to see what happens with Tesla. We'll have to see what happens with some of the S&P stocks. But I think because of that higher volume, we're going to see a lower price on Monday and Tuesday. I don't think we're going to see the bounce right away. And then later in the week, we'll see an upside perhaps at this resistance up here. So remember, former support here, broken here, turns to resistance. We see that over and over and over again. It's called roll reversal. If you are a member of any of my trade alert services through Market Rebellion, you'll know that I put out PDF documents that highlight these concepts so that our members can use them as tools for trading. And so that target was hit. I'm going to get rid of that as well and just leave the new targets in place. So again, to reiterate my downside target, let me get that chart set right there at 423.14, then the bounce up to 432.43. Now, keep in mind, the S&P and the VIX, for the most part, are inversely related. So let me bring you to the VIX to take a look at what we have here. Very, very impressive green candle. In fact, it is the longest green candle we've had all year. And one thing I want to point out is that we hardly have any shadow above that candle. Now, with that said, I have a target up here on the VIX up there around $30.17. Not quite sure we're going to hit that right away on Monday, but we'll have to see. Ultimately, I think the VIX will pull back like this, hit a roll reversal support level, exactly opposite of what I said with roll reversal resistance. This is where resistance, once broken here, turns to support here. So again, upside target short term, very short term, possibly up to this price level at $30.17, but ultimately by the midweek, I think we're going to see 26.06. Then I do believe, I'm not going to get too far ahead of myself here, but I do believe we're going to see a pretty impressive bounce in the VIX at that support level. So that's ticker symbol VIX. Last week, we had a request to look at Ethereum. I just more or less did a zigzag forecast on that where I said ETHE would drop down to that support level right there, 2111. It did that, and then it bounced a little bit early. It didn't hit that target exactly to fill that gap as I thought, but I'm keeping that in place up there around 2397 with the possibility of that gap filling at 2414. Now, I want to bring your attention to something that has got me a bit concerned. It's not just the cost of gas. Obviously, we're all looking at the pumps. We're driving by. This is a snapshot from Matt Shoup that came on April 3rd, earlier this month, where he took a snapshot at the general store in Big Sur, where premium is just under $10 a gallon. Now, if this doesn't shock you, then you're not paying attention, because this, I believe, is just the beginning. I think while this is not the average price of gas around the nation, I do believe we're moving into that area. So that's a big concern that could obviously throw us into a deeper recession than anyone may have forecast. But that's something to keep an eye on. But it's not the gas that's got me concerned. It's this. If you look at food inflation around the world, now this comes from the United Nations, the Food and Agricultural Organization, FAO. I want you to look at this blue line right here. You see that? That blue line is going straight up. And what is that? Well, if you look down at the table here, that's food oils. If you go into your pantry, take out any can, any packaged food, and you read the label, you're going to see that most of the foods that we eat have these oils in them for packaging. If you don't have those oils, guess what? The foods don't preserve as well and they spoil. This is just one of the many variables that are going to affect our food supply down the road. This is a chart going straight up, and it looks like there's no end in sight for that. And guess what? That's still not what's got me concerned. You see here, consumer headline, food inflation, again, up, just more confirmation of U.S. food CPI, right? Now, core inflation does not count food and energy. We know that because they make that look better than what it really is. But as you're hearing more and more, the term it's baking into our economy. This is baking itself into the economy. Prices are not going to come down right away. However, wages are not going up as fast as prices are going up. So people are losing buying power. This is what adds to an inflationary condition and causes fear. People holding back from spending because they feel they may not have enough money at the end of the month to go buy food for little Johnny and Sally sitting at the table, right? So they hold back, and that is what creates a recession. A depression is when they just don't have any money to hold back on. I'm not going to go that far, although it could happen, actually. I'm not going to go forecast a depression, but a recession, most definitely, I think we're going to see it rear its ugly head by the end of the summer. But this is what's got me concerned right here. This came out yesterday. Now, I found this actually by accident. I was not searching on Google. I used DuckDuckGo as my search engine just to find out what is happening with our feed supply. We buy mainly Purina and Nutrina for our horses and livestock. And we're finding that there's a shortage of food, not even for livestock, more for even pets like dog food. We're finding a hard time finding dog food. So I started doing some investigation to find out what the problem might be there. And lo and behold, I came across this article. This, my friends, is not a coincidence. As a former military person who's aware of my surroundings, I'm telling you right now, this is not a caution. I am sending out an alarm. This is my personal opinion now, I believe that we are literally under attack. China and Russia are not our best friends, and they will attack us. The hardest hit that we could possibly take as a nation is when you cut into the food supply. Study the art of war. What are you going to do if you're going to take out your enemy? You cut their supplies. You cut their water, you cut their food, you cut their ammo, and you let them starve out in the field until they come to you and surrender. That is what is happening here, folks. If you think that's a coincidence, then look again right here. This is a compilation of headlines that have been put together, recent headlines. Take a look. This is how I found it. Explosion and fire reported at Cargill Nutrina feed mill. And all these other headlines popped up. This is not one person setting a fire, because they're a pyromaniac with a torch. This is happening all across the nation in close proximity in time. I hope you don't think that this is a coincidence, because if you do, then you're going to be in trouble. Absolutely. I've been telling all my clients, go out there, and when you go shopping at Sam's Club or Home Depot or Walmart or Costco, don't look down. I tell people, look up at the top shelf. Look up at the top shelf. And when you're at Costco, and look at Costco, by the way, I'm just giving you like an extra freebie here, right on that key support level after a bearish engulfing candle yesterday. If they don't have product to sell, they're not going to make profits, right? Well, look at the top shelf. That's their future inventory that's getting ready to be loaded on the bottom shelves. If those shelves are empty, then we're going to run out of food. Look at the top shelf. I have many of my clients and followers, especially the followers on Twitter, sending me pictures of their trips to Costco and other places to show me the empty racks on top above. So this is a warning. It's not a caution flag. It's not a suggestion. I am warning people. What we are about to see is unprecedented. I called the end of the bull market on January 28th. January 28th. For those of you that were looking at that market report, again, go back and look at the January 28th recording. It's one of the most popular ones right now. January 28th, when we came out, I called an end to the bull market. Why? Because this trend line was broken right there. See, here's January. The major trend line, the bull market trend, the greatest trend in American history was broken. And right there, I called the end of the bull market. And if you remember from the recording, I said, I'm not going to call the bear market at this particular point in time. I'll let the other experts identify that. But now we are absolutely in the first phase of the 3 phases of a bear market. We're just getting warmed up here, folks. So be careful. Learn how to make money on the way down. Please like, share. Please share. Absolutely. Share this video with everyone you can, especially those who are in the markets. And subscribe. If you subscribe and hit the notification button, you're going to get my recording automatically notified that it's being posted. But I'm telling you, I spend a lot of time, many, many hours each week showing people how to use options to make money on the way down. We had a great day today, folks. I'm telling you, we had put spreads on. We have what's called negative delta. We have diagonal put spreads on in the Qs and IWM and diamonds and spiders. We're making money on those. I was even considering selling out of my Pfizer position for a profit yesterday, and I'm glad I didn't. Why? Because look at that. It broke out below the 20-period moving average. I might maybe take a profit next week if it bounces off of this trend line. But how do you make money on the way down on a stock like Pfizer? Well, you learn how to buy puts. We bought puts on this one, and puts go up when the price goes down in the underlying stock. Now, I gave you a little bit of a freebie taste test of what we do here at Market Rebellion, but don't just sit and hope that things are going to get better. Hope is not a strategy, my friends. It's not a strategy. Look at IWM again on that monthly chart. That is not something, oh, I hope it goes back and tests the high. Right? Look at the Qs one more time on the monthly chart. You know why I keep showing this one? Because if you go back all the way to 2000, you see that? That's the crash of 2000. If you didn't sell back then, if you did not sell a single share of what you owned in tech sector, guess what? It would have taken you almost 18 years to get back to break even. Think about that. Are you willing to hold on to any long positions and eventually make your money and ride the storm down? Right now, because this is so unprecedented in its scope, that is the worst strategy that anyone could tell you, is to hang on or buy more. At the very least, learn how to move your money into cash so you create opportunity on the way down. I know this recording went a little bit longer than usual, but I felt it was important to sound the alarm for people so that you not only not hurt yourself by staying long in the market, but learn how to not even survive in a market like this, but learn how to thrive in a market such as this. There's a lot of money to be made on the way down. You just have to know how to do it. So with that, have a great weekend, folks. We'll talk to you soon. So long.